Welcome back to another stock market open live stream. Almost said course member live stream. We've got riots in Dublin. We've got a hostage release and a ceasefire beginning in Israel. At the same time, we had a supply set of treasuries in Europe that was so large that now you have investors somewhat panicking in the United States that the Federal Reserve is going to keep flooding the bond market with so many bonds through their quantitative tightening program, tightening program, where they're essentially vacuuming up $80 billion per month of money, that you actually have treasury yields jumping throughout this news of volatility and protests throughout the world, a ceasefire in Israel, a stock market that still has earnings that are succeeding, but maybe not as much as many people hoped. And now the 10-year treasury is up 7.2 basis points. 10-year sitting at 4.48 right now. You've got oil coming down again, sitting about 81 on Brent. It's been in a downtrend for the last few weeks, which could lead to a negative month-over-month CPI read on non-core. The 2-year treasury is up only about 2 basis points. So that means you're getting a steepening of the yield curve, which could be a sign that either we're finally normalizing or we're getting ready for that recession/depression. Who knows? But we're here for it. So happy Black Friday, everybody. Of course, we've got an amazing Black Friday sale for you over at meetkevin.com. There's actually the word deflation involved. So if you're looking for more value at a lower price, whether you're a new member or an existing member, check out meetkevin.com because we've got amazing new content coming out within the next few days for existing courses. The new Bruce Crow courses, they're all dropping on Monday. All 2023 crash course style content to really get you going on not only building your wealth in stocks, real estate, entrepreneurship, liability, how to start a profitable side hustle, how to never pay taxes, how to minimize your tax burden while maximizing your wealth, liability protections, you name it, it's all there. So it'll be pretty exciting. So check that out at meetkevin.com. Let's take a listen and listen in over, to this RSV talk, because there's a big deal going on in China where we keep hearing about new potential variants of not just COVID, but also potentially sickness. And nobody wants to hear any of the lockdown words again. I don't think we'll ever have that kind of nonsense again, but who knows? Let's listen in here for a moment just to see what CNBC has to say about RSV vaxes.
Trips up once people realize $300 is a lot of money to pay for a vaccine that you didn't have last year, that you didn't really realize you needed.
It's really interesting. And I think part of the problem that we're seeing is that these vaccines are so new that even hearing from people trying to get the maternal RSV vaccine, it's been a little tricky, and especially that one for seniors too. But GSK, when it reported earnings last month, was saying one thing that's actually helping them vaccinate more people is that the IRA, the drug pricing law that was passed earlier, that actually eliminates the copays for vaccines. So I'm not exactly sure why that was the case, but
that's what.
By the way, when we just had our twins, they're suggesting, you got to get the RSV vaccine for your kids, your brand new newborns, and forgive us for being like, who manufactures these vaccines? And then we're looking and they're like, Moderna and Pfizer have some. And then we're like, we feel like we've been down this road before. We've heard about this before. So when were these approved? Just within the last 6 months to a year. Like, no thanks. Wait. Okay. Keep listening here for a moment. Pharma is such a massive industry. It's crazy.
Vaccine that's available for seniors and for pregnant people, which they say might make it more enticing for retailers to carry their vaccine. And then Moderna is also hoping to launch its own vaccine next year. So it's turning out to be a really competitive market, and $10 million globally is what we're expecting, which sounds like a lot, but we could be divvying that up between a bunch of different players here.
Angelica, thanks for joining us. I think I'm getting a pain in my right arm right now.
Yeah. Oh, no. This is a reference to COVID vaccines. No.
Seems right, Andrew, you're up to date. You're the kind of guy.
For the most part, now I don't know if I have all them all. I maybe have to do better. We'll see. I actually think I may be.
Does anybody actually still get the COVID boosters? It would be interesting to know if anybody actually still gets the COVID boosters. I don't know. Maybe somebody can chat in the chat here, the live chat. Let me know if still get the COVID boosters. Okay, so let's take a peek at pre-market and see what we've got going on in El stock market. You've got some strikes in Europe. Concerning some Tesla investors. Others are saying it's a bunch of nonsense and hogwash, and strikes and auto manufacturers almost go hand in hand. So it can happen to Tesla too. You've got NVIDIA here sitting at 482 in the pre-market, down about 1%, 0.5% getting shaved off on Palantir. Apple down about a third, right there with Tesla, Etsy, and Enphase down about 20 bips. Enphase sitting at $100. Nice inflection off that bottom. But you're still sitting in that nasty down channel. Really, if you want to escape that down channel, you're looking at something like Disney, which also is still rebounding off the bottom here. You've got the volatility index continuing its downtrend. If anything, we are probably sitting at some of the lowest levels we've seen. Volatility sitting at 1285. Last time we saw this sort of volatility, folks, was actually in the summer stock market rally. And very briefly, no, we didn't even get that low. Very briefly in July, we were at somewhere around 1415. We were somewhat at these volatility lows in 2019. Of course, we went even lower in 2017 until the bond market crisis of 2018, where volatility really spiked out. But I actually believe that this volatility decline chart is a very indicative, of what we should expect in reverse for the volatile Nike swoosh. I believe as volatility trends down, we still get ups and downs. That's the volatility part. But as the volatility index trends down, we get price action that just leads to a stock market recovery as people slowly start realizing inflation is dead. Not that price increases are dead. Those obviously have still occurred and we're still dealing with those higher prices, but that we're actually more likely to flip from inflation to deflation. That is scary for some reasons, and we'll have a deflationary main channel video coming out soon that I encourage watching. That is going to show you some examples of what's really happening out in the real world right now. Anyway, stay tuned for that. In the meantime, let's take a look at what the suits have for us. Again, it is Black Friday today. Happy Black Friday. We have let's see here. Oh, yeah, here we go. German borrowing plans, Black Friday focus, big supply here of treasuries leading to lower bond prices, higher yields. Tough balance when you've got the European Central Bank, the Federal Reserve trying to quantitatively tighten at the same time as potentially starting to get into an era of deflation. A risk here of deflationary pricing is that you create this self-sustaining depression almost. So then at the same time, we have break-evens. Let's take a look here. Looks like last I checked, we were stabilizing on the break-evens. 5.23 on the 5-year break-even, roughly consistent with what we had in the decade prior to COVID. If we look at the Federal Reserve FOMC rate monitor just to see how we're looking for rate cuts. We're pricing in 4 for next year. We are pricing in just a 4.7% chance of a rate hike in December, basically pricing in the Fed's done. 10% chance of one in January, but then we jump and flip actually to a 25% chance of a cut as soon as March. And then, of course, when we get to December of 2024, we expect rates to be about a whole percent lower, to the tune of about a 40 to 45% chance to have rates that much lower. I did actually see Nick T on his pod or a pod interview there with Kayla. I didn't actually hear anything that was super exciting about rate moves forward other than the Fed being done. So this is not a surprise to see Nick T believe this. I actually do believe Nick T is forecasting deflation. Not only is he forecasting that by talking about deflation and the Federal Reserve being done, but he also aptly points out what we've seen in the course member live streams of deflation coming our way. And he specifically talks deflation. And he also cites on his Twitter Walmart suggesting general merchandise prices are declining. Deflation be a game changer for our market, so we'll definitely want to pay attention to what ends up happening with all that. It could be a nicely welcomed relief, though, of starting to see lower prices for Black Friday. The question is, what's Black Friday going to end up doing for volumes at companies that we're looking for earnings from? And quite frankly, as prices come down, it's much more likely for you to have negative year-over-year comp sales and basically sell less year-over-year and end up with lower revenue, therefore, again, negative year-over-year comps, mostly because, well, oopsie-doopsies, prices are lower and volumes are lower, and then you get into this, unfortunately, recessionary environment. Yeah, this also comes after GDP numbers yesterday in Germany came in negative. We look at the German eco numbers. Let's pull those up. Let's go to Germany here. All right, Germany GDP coming in as expected, negative 0.1% for the final GDP read in Q3. The not seasonally adjusted numbers coming in at negative 0.8%. However, capital goods investment in Germany actually positive at 0.6%, but it was private consumption that came in at negative 0.3%. A lot of that we're seeing in America, by the way, as well, where what you're finding is individuals are starting to spend a lot less, but it's really the capital stock that continues to spend money. So these are your enterprises. And that's partly, I think, the AI revolution that a lot of folks confuse. I think there's this argument that, oh, AI is somehow going to make people spend more money. But that's not actually likely the case. It's actually likely the case that corporations just end up spending more money on enterprise hardware, H100s for server systems, whatever. So you have corporations that spend more and consumers that actually end up spending less, which then makes you wonder, how do commodities react in deflationary environments before the money printer gets turned on again? And will the Federal Reserve let us get to deflationary environments? Man, it'd be interesting to see how for example, Bitcoin might work in a deflationary environment. There's a period of time people thought of Bitcoin as an inflationary hedge, which obviously turned out not to be true, which is something we've talked about on the channel before, that, Bitcoin really operates as a risk asset. As risk assets go up, we usually see Bitcoin go up. If folks start pricing in the money printer getting turned on again, it could actually be quite bullish for something like not just risk assets in the stock market, but also Bitcoin. Here's Bitcoin after the Binance nonsense, by the way. We look at the last 7 days. We actually there briefly fell to about 36 to 36.5, now jumping back up to about 37.6, which means we're sitting at about highs of this cycle at the moment. So we'll see how these evolve. Let's listen in here for a moment to CNBC.
To be an extremely good actor.
Affirm.
Are you though excited about? Are you excited about AI, or are you somebody who's a little anxious about it?
No, I'm an accelerationist, to use the newfound terminology. I think if you look back historically, as far as you want to go, you'll see that technology has always given us more safety,
deflation,
better distributed wealth, created opportunities for people. I think sort of breaking the looms is a terrible idea, and sort of putting gates around innovation is just a bad move. We have to be careful, we have to be thoughtful, we have to regulate it. I'm a big fan of thoughtful regulation, but ultimately saying, let's just, put the genie back in the box and, seal it and hope it doesn't come out, I think is a fool's errand.
Hey, Max, just back to this idea of how the consumer is doing. And one of the things we've heard a lot lately is as rates have gone up, how that's really put a pinch on the consumer. What does that mean for your business? How does it impact things as interest rates rise? What do you see happening? And does that put a lot of strain on the consumer? Does it slow down their purchases at all?
These things take a long time to percolate fully through the economy. For a firm, we spent the last year in many ways adapting our business to the notion of higher for longer. And the last couple of quarters that we printed really show that we are able to operate a business with the same margin structure, with the same output, even in this new world of higher rates. I think consumers, generally speaking, are much more impacted by inflation itself, what the interest rates are meant to fight, than the cost of borrowing. Cost of borrowing eventually percolates down to cost of manufacturing, and the prices reflect that, and that's why inflation is so sticky. But I do think that we are primarily seeing change in shopping trends, e.g. shift to store brands a little bit more often as people deal with the fact that their dollar doesn't quite go as far as it used to.
Yeah, we've seen that for about a year, people dropping to lower priced products.
All of us want to wish you and your family again happy Thanksgiving.
Okay, they're getting them off the TV. They're like, you're boring. Get off CNBC.
All right, up next, will there be trouble in Toyland this holiday season? The maker of LOL dolls, MGA Entertainment, founder and CEO Isaac Larian will give us his forecast for the consumer. That's next. Squawk Box will be right back.
Trouble in Toyland. What is LOL anyway? I don't know. All right, let's keep going here with what we've got on the suits. We'll also take a peek here. Yeah, Gaza truce appears to hold. That's great. It's fantastic to hear about that right now. We definitely want to see that. Black Friday getting started. It's going to be pretty exciting to see how Black Friday goes today. I'm trying to evaluate it. I want to see what y'all think in the comments. Should we, last Black Friday night, it's kind of crazy. We went to, I can't believe it's been a year already. Honestly, I feel like 2023, it's hard to even remember what year I'm in now. 2023 flew by. I can't believe there are only like 36-ish, 37-ish days left in the year. I'm like, oh, I got goals that I want to get all this stuff done by the end of the year. And usually when you say like by the end of the year, it's like, we got time to get it all done. Now all of a sudden it's like, oh no, we don't have time left. It's kind of wild. But anyway, we'll watch what happens here. I also obviously want to see how today's half day in the stock market goes. We are only trading a half a day. So what that means is the stock market's going to be closed in about 4 hours and 20 minutes, but it's technically not even open yet. We got pre-market open. NASDAQ's about to go green here. I actually really hope we could have a really, what would be fan-frickin-tastic today is if we could get nice, thick, juicy green across the board. Pray for the green. Buy the stonks today. Push it, baby. Why? Because then people are going to spend more money. Maybe. People are going to go out to those stores, and the people who have any stocks left, at least, they'll be like, I'm about it. Apparently, Peloton's selling let's see. I think they've got a sale going on their treadmill. Not that it's worth it. You need a better deal on treadmill on, what's it called? Amazon. But let's see. Ultimate Tread Package, $2,900, down $600 or $500 off. All right, whatever. Yeah, don't miss out. Save $500 on Peloton Tread. That's the baby killer. No, is it? Yeah, actually, it was. That was unfortunately the one that killed a child. That's so terrible. I can't even freaking imagine that, man. I love children so much. Anyway, okay. So here's the cues. Kind of wild to see that the cues have now expanded past our summer rally. Now, what hasn't extended past the summer rally are any of my stocks? Well, with the exception of NVIDIA. But I think it's coming, knock on wood. But anyway, I think as we get into a more deflationary environment and price competition, you are actually going to see more pressure on companies to reduce production as they get screwed, basically, like your Ford, GMs, and the other auto manufacturers, as well as other competing solar manufacturers or otherwise. And only the ones with relative pricing power in their fields will actually do very, very well. So we'll see. I am curious, though, to hear what we're about to hear about this Toyland thing. So let's listen to this. They're just back.
Isaac, we should put this in context. Toy sales were so hot in 2020, 2021 when people were in lockdowns. You saw them skyrocket. This year, I think overall the year has been flat, but you've been warning that you could see a pullback of double digits. Why don't you just tell us what's going on right now?
Yes, good morning, Becky. Thank you for having me. Happy holidays. Toy business, people will buy toys for their kids all the time. And at the end of the year, there's going to be a toy under the tree. However, I see the toy business being down as a whole, industry-wise, about 8 to 12% by the end of this year. But there are some bright spots. If you have hot toys, and MGA is fortunate to have about 4 or 5 of them. One of them is called Little Tikes Story Dream Machine, which is pretty much sold out, will be gone before Christmas. Then those toys will sell. But consumers are waiting for deals. And Black Friday has become what I call Black November, Black December. The whole month is basically is the Black Friday. So it's going to be interesting to see. My daughter owns a luxury fashion business called Gaia. And strangely, her business is up. So I don't know what to make of it, but I think toy business as a whole is going to be down.
Part of what we've seen, though, is, as you mentioned, hot toys are hot toys. If you look at Mattel, they've had some super success with Barbie. And I think Barbie sales were up 25% in July and August after that movie was released. Is that part of the issue that's facing here, is people are being picky and choosy? And if you don't have the hot item, whether it's from a movie or from something else, that line's going to suffer?
Yes, definitely. When movies come out, usually I've seen this for 44 years, sales grow for about 4 to 6 weeks and then decline. And Barbie now, sales are down. People are looking for great toys. When you look at Rainbow High fashion doll, without having a block.
I want to hear about the consumer warning. Where's the slowdown?
One fashion doll in the industry worldwide, because people are looking for great toys, not just a movie. So it's really, innovation is very key to selling toys. And as you know, Becky,
you said Barbie sales are down. Barbie sales are down? I hadn't heard that.
Yes.
That's what your trend tracking is telling you from a year ago?
Yes, after the movie, the sales peaked, definitely went up after the movie. But now you don't see any, except for one item, you don't see any Barbie on the top 50 toys. And MGA has 5 of them. So it is, I think it's about the product and the innovation. That's what consumers are looking for. And they're looking for deals. They're looking for great promotion this holiday.
I think I read earlier that you had said in your 44 years of doing this, this was the toughest year. Is that really the case?
It is 100% the case. It's the most challenging toy sales I've seen in 44 years.
Wow.
Why do you think that is?
There is a lot of things. First of all, during the pandemic, there was too much inventory out there that is cycling through. I mean, if you bought a board game during the pandemic, you're not going to go buy another one now. Right. So those are one of the things. The lack of really great innovation, hot toys is another one. Consumer is pinched. I mean, student loans are going to start paying, or they're already paying that. And that is going to take some money out of all consumable goods, not only just toys. So there is a different combination of forces that are making this happen.
Why did I see, Isaac, a Walmart advertisement, I think it was yesterday, telling me that I shouldn't give kids a toy to share. I should buy them one each separately. Did you see that one? I didn't understand. Like, don't share it. Buy each one. But what's going on there? I never thought that was a problem.
Well, I got to tell you, William White, who's CMO of Walmart, has done an incredible job this year of promoting and marketing toys, and that's one of the things in there. But if you need to buy for a girl, you buy a Rainbow High doll. If you want to buy for a boy, you buy a Cozy Coupe car, which you can share. So it's really different. You cannot specify it.
Hey, Isaac, want to thank you for your time. I know that this is a really...
Yeah, okay, interesting. Worst, I mean, really, I feel like I only got one line out of that. Worst sales or hardest time in toy sales in 44 years. You have to cut prices. And that's what you're starting to see at companies across the board. And that's why people are now starting to worry about deflation. With the exception of on these weight loss drugs. Listen, no deflation over there. What are they saying here? Oh, okay. They're literally just using that as B-roll. Okay, very well. So let's take a look at what the suits are saying this morning here. What's the latest here? Yen is weakening. Yen may have stabilized against the dollar, but it continues to weaken against a basket of other partners. Since China is a bigger trading partner than the U.S. for Japan, that implies the pain for importers is getting worse, even as the U.S. trades flat. So it's basically saying China is importing less from their trading partner, Japan. And that's not a surprise because the Chinese economy is in the toilet. Not only is the Chinese economy in the toilet, but now they're starting to finally try to stimulate more to support home builders and the real estate market, which is really important because real estate in China makes up somewhere around 3 times the size of the economy that it does in America. So in other words, you think the real estate market is important, in America, it's much more important in China as a percentage of GDP. And now you've got, talk of unprecedented support finally starting to come out for builders. You'd actually see that right here. Here's a Bloomberg piece. China weighs unprecedented builder support with first ever unsecured loans. Banks now potentially able to offer working capital loans to builders. This is like the opposite of their 3 red lines policy they had previously. China may allow banks to offer unsecured short-term loans to qualified developers for the first time, people familiar with the matter said. A major push to ease the property crisis that's dragging down growth in the world's second largest economy. As part of a package of new measures to stop the real estate industry, the industry's crush, to backstop the real estate industry. Regulators are considering allowing banks to issue so-called working capital loans to some developers. Unlike other types of loans available to builders that typically require land or buildings to back these loans, these new financing facilities would be unsecured for day-to-day operations, allowing basically lenders to support distressed builders. It's basically a form of stimulus. Because really what the government's saying is, hey, lenders, go give unsecured debt. And then, of course, the lenders are like, why would we do that? And then, of course, what you generally have is the government saying, we'll back your unsecured loans. You do the unsecured loans, and we'll take some of the losses. It's very much what we saw in COVID here in America. The unlimited bailout, so to speak, Barbie sales aren't selling because millennials aren't having children, LMAO, not them spending on experiences. Oh, there's like a debate going on in the comments here. This says Kevin over here. Max says China's also waiving some visa requirements. You're probably not wrong about millennials not having children. I love children so much. I just want to have like an army of children. Knock on wood, we've got 4 wonderful, beautiful, healthy little children right now. 8, 5 3/4. Don't get that wrong. There he is. 5 3/4. There's 8. And we got the twins. The twins are now technically 0, given that they were born at about 36 weeks. The twins are officially now 40 weeks, which is kind of crazy. They are now essentially 0, since I guess they were born negative. I guess I guess that doesn't really count though in terms of your birthday. But anyway, yeah, they're actually now when you hold them, they feel less fragile. That's what happens when you're twins, though. The little preemies. They come out a little earlier. So Kevin, or what is this? James earlier shift on. Okay, we're talking about some suggestions on previous videos. Yeah, 100% down to do them. I think that's a great idea. Toys are important. Yeah. Someone here saying, "Oh, it's TikTok is going to take over a kid's willingness to play with toys." What do we got over here? Talk about the weight loss drug market. Oh, by the way, give me like 30 seconds. I got to get my cup of coffee. I'm going to die otherwise here.
I'm not sure about that, but here at Barclays, we've tried to create baskets in terms of winners and losers for this.
Right.
And talking to our colleagues in consumer medtech, it's sort of, well, what actually can win aside from pharma here? Because everything else could potentially be at risk.
So in terms of just playing this space as an investor, you just buy the basket of big pharma is what you're saying.
I mean, what's really worked across all of global pharma this year is owning Novo and Lilly, because it's been a difficult space kind of sector wide. The next data point that we're waiting for is Pfizer is going to have data in phase 2 of an obesity pill, but they'll still need to run a phase 3 study, which will take over a year.
And what about insurance? Is insurance going to cover this?
Yeah, so what both Eli Lilly and Novo Nordisk are doing is they're trying to run clinical trials, basically saying, if you lose all this weight from these drugs, does that mean you have less chance of things like going on dialysis, having a heart attack or a stroke? And Novo just presented data from a pretty landmark study at a conference in Philly just a couple of weeks ago, showing that you have a 20% less chance of having a heart attack or a stroke if you take.
Yeah, and keep in mind, this happened before with fen-phen, and then it basically ended up proving to end up causing a heart disease, not helping people lose weight, and then because of the weight loss have a lower chance of heart disease, which that makes sense. If you weigh less, you have a lower chance of heart disease. Fen-phen actually ended up causing heart disease. Crazy. Absolutely crazy. So, but anyway, I actually did, I had a great Black Friday, sorry, not Black Friday, Thanksgiving yesterday, went and got an awesome tomahawk steak. The darn thing's so freaking huge with appetizers and all that kind of stuff. I ended up splitting it with my dad. I obviously love my dad, big fan of my dad. We had our dog Zeus there, and that's cute in German. That's because obviously we think the dog's cute. Here it is. Here's a picture, but with that beautiful, delicious steak here. But my dad's has struggled with weight loss for a very long time, and so we actually touched on the idea of, hey, what about like Wegovy or Ozempic or whatever, and so he's gonna be talking to his doctor about that. So we'll see. My take with him, just because I'm personally not the biggest fan of drugs and things like that, is like, hey, if it works, maybe use it in the short term, but like, don't rely on it forever. Let's get you off of it, ASAP. Again, I'm no doctor, but anyway, let's listen in over here.
Futures up by about 2, the NASDAQ up by 1. And this comes after gains continued. I think 6 out of 7 days, we've now seen the S&P and the NASDAQ up in a row.
Yeah, tell him to get 10,000 steps in. So he actually used to do that. And he walks the dog 30 minutes a day in the morning now. He used to walk like 5 miles, basically. He got like 20,000 steps a day. It was crazy. The problem is now he has hip and knee pain that really limits the ability of how fast or how much he can walk. But so it's kind of like you want to exercise, but it's hard, especially if you have pain, and then, it takes forever to get consultations on, maybe hip surgery and stuff. It just sucks, man.
By $1 to 76.09. Steve, you were going to make a point on this too?
Very quickly, notice the huge dispersion in estimates for the holiday season.
Somebody's like, tomahawk steak on Thanksgiving? Freaking call me. Hey, you settle down, okay? They had turkey at the place. And I'm like, do I really want to sit here and eat turkey? Or do I want to get a giant ass bone for our dog after we eat all the meat off of it? That.
Enjoyed being here with you today, and we will see you all back here next week. Right now, it's time for Squawk on the Street.
There's an article here about YOLO consumers to ditch winners and losers this holiday season. shoppers prioritizing spending on experiences over goods. A group of U.S. consumers have surprised companies and economists by splurging on Taylor Swift concerts, trips to Paris, and dining out, even as their savings decline. Call them the YOLO consumers. It's a cohort that's never let go of the you only live once ethos. I love Paris. It's gone a little downhill though in the past few years. I met my wife in Paris. I obviously cherish Lauren, but it's still Paris still has a great place in my heart. I scootered with my 7-year-old when he was 7 last year. We scootered around Paris at night. And I showed him the Eiffel Tower and the Louvre and everything at night on a scooter. And then it turns out now they're banning the scooters in Paris. I'm like, what the hell?
Appears to have taken hold, setting the ground for a staggered hostage and prisoner release.
Let's begin in classic Black Friday fashion with an eye on retail. Investors watching what is typically one of the busiest shopping days of the year for signs of more cautious consumer spending going into the holiday season. I think page one of the Times, Sarah, is retailers worry about holiday shoppers' mood. And yet NRF is expecting best turnout.
Someone here says Ozempic is on back order in Canada for 4 months. Bro, everything on Canada is on back order for 4 months, including doctors.
We're up 12.7%. 2020 spending up 9%. And then 2022, it kind of
Lauren's half Canadian. I'm allowed to say it.
0.4%. So we'll see if we can get a number. The original expectation from the NRF was 3 to 4%. I feel like expectations have been lowered by the retailers themselves, who a number of them have warned about the holiday spending season. Even the retailers that came out and raised guidance, like in Abercrombie and Fitch, which are doing really well, didn't come in as high as the market expected when it came to that fourth quarter guidance. And so I think the setup is that people aren't expecting a very strong, they expect promotions to be pretty deep. We've already seen that. The question is, are we still paying more than we were a year ago with inflation?
Yeah.
But overall, I don't think there are.
But then again, Walmart thinks no. We're going to start seeing that deflation.
What do you think, David?
What do I think, Sarah? Well,
were you going online yesterday?
I would note that things are very different than they were 5 years ago, let alone 10 or 15 in terms of judging overall demand from the traffic that we get on a day like today. As we all know, people shop increasingly online, and those deals were apparent or already made apparent a few days ago and will continue throughout the holiday season. So it's become, Carl, a lot more difficult in some ways, I think, and all the different data points we get and providers to really pinpoint, at least during the season, how strong it is.
Remember back in the day, like live shots were material in terms of foot traffic, and I would go out to the mall and you would say, yeah, it's busy or it's not. Longer calendar this year, 31 shopping days between Thanksgiving and Christmas, which, as Jan Niffen said on Squawk today.
Man, I remember back in my day, back in like 2008 days, I pulled this up. This was our trip after Paris. We went to, I think it was Liechtenstein or whatever, had the Swarovski Museum. I don't know. Maybe it was Austria. I can't remember which one it was. But anyway, this was us back then. But I remember back then when you had Black Friday back then, like the malls were freaking packed. You couldn't even walk. It was just like you're walking through like this. It's crazy.
Hear about on conference calls from the retailers. They warn about it. Target listed it, for instance, as a headwind. Hard to really quantify. So I went and I found some surveys. Jefferies did a survey recently, 850 plus consumers with outstanding student loan debt. They say that the results indicate consumers in this cohort are under significant financial pressure. When asked if they're cutting back, 50% said on apparel and accessories, 42% said on restaurants, and 42% said on beauty. Interestingly, 41% said on grocery as well. So that could lead to some trade downs. I think that that's sort of an unknown factor for a very important demographic cohort.
But, Sarah, you've also been tracking the commentary from many of the retailers. You do it oftentimes at the top of the 10, certainly most recently during this earnings season.
Yep.
I mean, as you kind of indicated earlier already, it was a mixed bag. That's being kind. I mean, there was a lot of cautious commentary, it would seem, although it's not clear exactly if that's just sort of a forerunner to expectations by some of these CEOs and CFOs, or they're really seeing it in the terms of the numbers.
It's cautious commentary, and part of it is that where consumers are spending matters a lot right now. I mean, we should just pull up a year-to-date chart of Live Nation, of Carnival Cruise Line, of Marriott. This is still the YOLO economy. right? Where the spending is.
Oh, she's stealing the Bloomberg article that I was just talking about. Come on, Sarah. We literally just read it. We're like, oh, here's a Bloomberg article talking about the YOLO economy. Here's your chart. I'll do it. CNBC ain't doing it. Here's Live Nation. Clearly up since before COVID. Actually above that moving average, trending up nicely. Carnival, I'm pretty sure, is down, though. Yeah, Carnival's in the toilet. I don't know why you would use Carnival as an example to talk about the YOLO economy. There needs to be like a Taylor Swift stock here or something like that. I'm not seeing that. BBY for Best Buy, coming off some of its highs over here. Macy's, I know, is off its highs. It's really Abercrombie that really impressed, because they went to negative income there for a while, and that led to belief that maybe they'd go BK. Obviously, when a company goes from fear of BK to not, there's a chance you could get quite an aggressive price spike. So Abercrombie, seriously, nice price spike here. I mean, some of the highest prices you have seen since 2011 at Abercrombie. I used to work for this company back, I guess, when would that have been? 2007, 2008, somewhere around there. Last bull cycle. Into the last bull cycle. Oh, no. Anyway, okay. Let's take a look at the pre-market again, and let's just see how things are moving in the pre-market. You've got, let's see. Oh, look, there's DWAC holding on to $17. You've got the Qs sitting at just 4 basis points to the downside. Tesla down about 31 bips. 14 on Enphase, about 75 on NVIDIA. ChargePoint actually positive, along with Rocket Mortgage. A lot of folks trying to speculate on companies like these home lenders, suggesting that, when they hit bottom and rates hit bottom, though, these will be the companies that'll do well, and maybe they'll be hitting bottom soon. That's at least one of the ideas. Who knows? Anyway, okay, let's see what else. Bond rally. Let's see what we got. Oh yeah, okay, we touched on this a little bit earlier. Let's talk about this. Reminder: today's Black Friday. We are introducing deflation, actually, along with more value. So go check that out at meetkevin.com. You'll see some of the amazing, a bunch of new lectures coming out for existing courses, and the new Noobverse Pro set coming out Monday. I'm accelerating when it all comes out, getting it all done by Monday, which is exciting. I'd originally promised December. We're getting new lectures out by Monday, which is fantastic. And they're really good. Like, if you want step-by-step crash course, how to start a side hustle, how to protect yourself from a liability point of view, insurance, speak and present with confidence, sales, how to never pay taxes, talk about investing in stocks, investing in real estate, how to buy your first home, how to take advantage of this cycle, all of it. Brand new lectures for all of it. Really, really good. So make sure to check that all out by me at meetkevin.com. Best price guaranteed going forward here on Black Friday. And if you're an existing member looking to make sure you can maximize the value that we're providing this Black Friday season, email us at staff@meetkevin.com. We'll take good care of you. So bond rally shows signs of stalling. Markets rab. Treasuries were under pressure in a holiday shortened session, with Monday's sizzling rally in global bonds showing signs of stalling. 10-year approaching 4.5%. With the S&P heading towards its fourth straight week of gains. Stocks will close early for Black Friday, but the question is, are people worried about supply in bonds? And the answer seems to be yes. Too much supply of bonds means prices go down and yields go up. Sitting at about 4.47 right now. There was a point last week where it looked like we were about to hit about 4.39-ish. And looks like we're coming right back off of that right now. Bitcoin trending up to about 38,000 just in the last few hours here, knocking on the door of 37,978, coming after the Binance nonsense. A nice little jump there. I still think the guy's a fraud, but I do think Binance will be brought into compliance, and it's actually a good thing long-term for cryptocurrencies. You don't need somebody like CZ, but once you start getting things into compliance, it's actually great for cryptocurrencies and clears the way to ETFs. There are the Qs. trending now positive, making their way back to all-time highs. Kind of wild to think about. SPY, look at the SPY. Oh, you're so close to all-time highs on the SPY. Not inflation adjusted, obviously. 455 divided by 467 puts us 2.6% away from all-time highs. Now, if I inflation adjust, we're about 17.5% away from all-time highs. Which course is the best to start with? Honestly, by far, the best one to start with right now is it's the gold course, the noob versus pro one, which, if you look at any of the courses, you'll see it on the checkout page. There's also, I'm pretty sure, a link for it on the front page. But that's where I would start, because it's all of here's the 2023, 2024 applicable crash course style. And then you go from there to the others. All right, let's listen to a good question, though. Let's listen in here.
Really watching is weather. Unfortunately, weather has been warmer. We need cold snaps, and that will be very helpful. Warmer weather overall has been a penalty to this holiday season. One other thing we're watching is there's an extra day between Thanksgiving and Christmas. That could help by 20 to 50 basis points, and we need all the help we can get this season. So gas is something that really does have a lot to do with traffic. Lower will be better.
Oliver Chen, thank you very much for setting the scene for us on this Black Friday. Thank you very much. Happy holidays.
Let's turn to the latest in the Israel-Hamas war. The two sides agreeing on a temporary ceasefire as part of a hostage release deal. NBC's David Noriega is live on the scene with the very latest.
Okay, yeah, to answer your question, so you go to meetkevin.com, right here, gold, when you click on courses at the top. So just click on the little courses button, and gold right here is freaking awesome. You're basically getting 14 little courses all packaged together in one. It's amazing. I'm filming it right now. For $375 for this, like, essentially crash course on all of this. Sell anything to anyone, negotiate any deal, boost your productivity, nutrition, fundamental stock analysis, renovate real estate, buy your first home, never pay taxes in America. This is an insane price, in my opinion, for the value. And I've been filming it. I still have some work left to do, but I spent, for example, all day yesterday filming. I'm like, this is really good. So I'm really excited about this. So do check that out. That gold level Black Friday exclusives, pretty amazing. So, okay, let's keep going here with CNBC. What do we got?
Okay. We've heard from the White House that none of those hostages will be Americans. It will be women and children. Are all either
David
women.
Noriega of NBC will do our best to keep that signal going. We are expecting some of those releases around 4 p.m. Local time, as well as hundreds of trucks of humanitarian aid that, as part of this deal, will be able to go into the region.
That's right now, by the way. It is 4:13 in Israel right now. So technically, those hostage releases should be occurring right now. So far, it looks like the truce is holding. Oftentimes when we hear ceasefires, sides don't listen, but it does look like that it's actually holding right now, which is great. Let's go listen for a moment. Let me see if I can get Doomburger on. Sometimes I can't, but I think I fixed it. I'm not sure. Oh, they're on commercial. Why do they go on commercial at the same freaking time? It's so annoying. Okay, fine. We'll be forced. We'll be forced to do nothing. Okay, so all right. Let's see what else is the news of the day. Again, warnings of deflation coming from Societe Generale, which led to 25%, nearly 25% unemployment during the Great Depression and 4 years of price cuts. Wouldn't be surprised to see that happen this Black Friday season. So I'm pretty excited to get out there and look at the stores. I usually like going to the stores later in the day, like 7, 8 p.m., because I could then go look at, Best Buy and Walmart. And what I like to do is I like to see the leftover inventory on the shelves. If the shelves are empty, I get really excited. If everything's still stocked up, I get nervous that deflation is coming. And that's great. We want to see lower prices. But the question is, will that lead to a horrible earnings cycle? TBD. So, okay, there's front page of the Wall Street Journal. Why you should be able to sell your kidney. The economy is tough when the front page of the economy literally has why you should be able to sell your kidney. What the hell? I mean, it's probably going to be something like, oh, well, you only need one, and you could get some good money, and it's humanitarian. You're fighting the good fight by helping people out who need a kidney. I mean, yeah, okay, for freedom. If I want to sell part of my body, it's up to me. Others say it works better. Oh, okay. To reduce waiting lists. You should just legalize it and regulate it. Okay. All right. All right. I don't dispute that there are a lot of people who need transplants, and that everybody should be an organ donor. Go sign up on your DMV website right now. Organ donor. It ain't gonna make a difference to you. Do a good deed. It's all mine. So anyway, okay, all right. Then that's right next to another piece. How to avoid being boring at 60. Maybe donate your organs. Anyway.
Week winning streak. Jefferies chief market strategist Dave Zervos joins us now here at Post 9. We'll talk about the equity markets, but we'll start off on the broader credit markets. David, good to have you here.
Great to be here.
In person.
Been a while.
Looking good.
Feeling good.
Thank you. Good. I'm glad to hear that. Heading into 2024, you remain hopeful that all of those who were involved in misunderstanding U.S. inflation basically shut up. But of course, those are my words, partially yours. That's not going to be the case. But you do say, please don't fall for another one of those flawed demand-side Armageddon-style recession calls in 2024. Why do you say that?
Well, I think all the arguments that the folks are making that are about a recession coming in 24 exactly the same that they were making a year ago. Nothing's changed. And I look at this as a year where we really learned that supply is the driver of inflation, that it's really been a supply side.
Well, yeah. Corn here is asking, is it 75% off for the platinum level on the courses? It's actually 77% off on the bundles. So you'll see that here if you go to Meet Kevin, 75% off the courses, 77% off the bundles. If you need a custom bundle, email us at staff@meetkevin.com. We'll be helping all day long. But that's also true, for this is the more experiential over here. This is like shadow and financial analysis and stuff like that. But I really think, what we're seeing in the leading indicators is that the gold and the platinum are the most popular. Platinum is just like literally here's everything. The deep dive and the new stuff. So it's like the new, the old, it's everything. And I wouldn't necessarily say old because, like, for example, do-it-yourself property management, that's not over here. But this is a course done with Connie, teaching you how to actually do property management yourself. These are really good. I put a lot of effort into these. And all of this content, all of it, drops Monday, which is really exciting. So and that's for start with this. If you want, start with this. Start with the gold level at 375. But yeah, platinum, especially existing members, a lot of people are upgrading and they're just getting what they need to up to platinum. They just literally get everything. And that includes the gold anyway. So go check that out at meetkevin.com. Okay, keeping going here at the market. 11 minutes to the market open.
What I like to think of as central bank heaven. In central bank heaven, there's a chair with Paul Volcker sitting there, and everybody's looking up to him. He's got some German guys and some Swiss guys around him, maybe a Japanese guy. And then there's central bank hell, David. And that's Arthur Burns. And you throw a few Italians and Greeks and Argentinians. And I guess the Argentinians are going to be out of a job as a central bank now. But,
yeah, there's a new place in hell for them,
yeah,
I think. Yeah.
So, yeah, they go even to a new place. But I think that's where he wants to go. And I think he can go there. I think he's done an incredible job at managing one of the most difficult supply shocks that we've witnessed in the markets in our careers.
Although there are still questions about whether we go now from 4% to 2% on inflation, this last mile. And we've seen a little bit of worrisome signals on the inflation expectations, certainly in the University of Michigan. So it's not like mission accomplished.
No, it's not mission accomplished. You're right. And that's why I kind of answered David's question the way I did, which is to say I don't think he's going to give in and sort of declare an early victory. I think he's going to do a few flag waves like, hey, we got this. And but he's not going to go all in and say, hey, we got this and we're cutting rates now. And I think that market might be ahead of itself.
No. I don't think Jay Powell's going to say that until he's actually starting to cut. Some folks asking to email for questions for the courses, email staff@meetkevin.com. But so I'll leave that up on screen there for a minute. Yeah, I mean, we know this already. Jay Powell can't say he's done until it's official that inflation is dead. But the leading indicators looking at company earnings calls, which I just dropped a video on the main channel, Meet Kevin, about this, is that deflation is starting. Watch that video. It's critical.
Demand side pressure, which maybe gives me a little more confidence in answering your question, which is that there could be some demand side slowing that brings inflation a little bit faster to 2%.
So then at what point are real rates restrictive enough where you could have a cut of some kind, regardless of the motivation?
You know, that seems to be the argument that the John Williams has made, Mary Daly's made. You've seen it from a lot of economists on the sell side and private forecasting economists. I get it. I mean, real rates are going up. If nominal rates are staying steady and inflation's going down, real rates are going up. But, you know, kind of going back to where Sarah was, we still have a job to do. And he has a job to do. And we're still at 4 on the core CPI. And I just think he's not going to jump the gun on it. And I've made a big point this year, and this, I think, doesn't get enough airplay. We haven't talked about it much when I've come on via Zoom with you guys. But the balance sheet of the Fed is still super, super expansive. It's an $8 trillion balance sheet with all that liquidity, all those reserves, all that cash in circulation. Not to mention that the balance sheet took a huge loss that the market would have otherwise had to take if there was not a large balance sheet. So the balance sheet is very stimulative. And you can't look at monetary policy just through the real rate lens. You have to take it with balance sheet and real rate. And they have 2 levers now. They've had it since 2008. And the balance sheet, to me, is still super accommodative. And that offsets some of that restrictiveness in rates. Now,
a lot of people disagree with you and think it's not the stock, it's the flow, right?
A lot of people hate that view, Sarah.
Yeah.
But I think it does a lot of explaining of where we sit today, even with 5.25% interest rates, because 5.25 is a big number, and taken by itself, I think would have done a lot more damage without the balance sheet being so big. But you're absolutely right. I am speaking from a minority, which, again, I like to do.
Well, David, we're very happy to have had you here. Come back in person again soon.
It's so good to be back. Have a great
Are
Thanksgiving.
you waiting
weekend.
till the Fed cuts to cut your hair again?
No, I'm not gonna do that. Maybe we'll do the beard next time.
Okay, thanks,
All right, look at him. He looks great.
It looks great. I'm just wondering.
Yeah, hey, my goal is to go beard mode, and I gotta get my hair back. I kind of miss it. Although I will say, when I wake up in the morning, there's not much to do in terms of doing the hair. Anyway, New Jersey Governor Phil Murphy just posted on Twitter about the American Dream Mall facing a bomb threat. And now all of a sudden they're evacuating the mall on freaking Black Friday. Bro, what the hell? For your safety, there's an emergency situation at the Emergency Dream Mall. All guests, tenants, and employees should walk to the nearest exit and evacuate the building. Do not use the elevators. Jeez Lord, man. Oh, okay. This is an interesting article I haven't seen before. What is this? Consumption is expected to rise this holiday season, but at a slower pace than in recent years. So still positive, but at a slower pace. This reflects a period of longer elevated inflation, higher interest rates, and the resumption of student loan payments. Okay. Here's a look at what different companies expect. Online spending during the first 20 days of the holiday season has outpaced Adobe's projection so far for the season. Wow. That's surprising. Adobe sees more people using BNPL. That's not sustainable. I saw a credit report the other day. Somebody had a BNPL loan that they got in April of last year, and they were late. I think it was like 11 out of 15 payments. And I'm like, what the hell? Anyway, so Salesforce projects holiday sales of 1.19 trillion, essentially flat year over year. But again, those leading Adobe numbers are actually suggesting positive. And then Deloitte says that consumers, mostly driven by higher income shoppers, could actually drive sales up 14% versus last year. So basically, nobody knows what the hell is going to happen. We've gone from flat to Adobe saying it's going up to Deloitte saying it's going up 14%. Oh boy, oh boy, oh boy. Well, I mean, that's just the way that surveying and forecasting is, I guess. Tesla's still down 0.5% here on Black Friday. I guess you're getting a little bit of a Tesla stock Black Friday sale. And Tesla now sitting at, in the pre-market, 232. Sort of been bobbing around this level here for a while now. You've got Enphase down 6 bips, QQQ down 6 bips as well. You've got NVIDIA down 83. Looking for the big gainers and losers this morning. Nothing really moving big today. You know, biggest drop here is actually TMF at 2.53, but that's 3x leverage. Palantir about 1%. Flipping to the upside so far, Rocket and Vitae, Open Door leading with only about 1.5%. So pretty flat market right now. We'll see how that goes. Okay, let's go listen in. What do we got on Doomberg?
First up, Bank of America cutting its steer price target down to $399, expecting consumers to keep pulling back on big ticket purchases. Next up, Citigroup raising its Salesforce price target up to $247, seeing an improving backdrop ahead of next week's earnings. And finally, Argus double downgrading Pioneer Natural to sell from buy. The analysts expecting ExxonMobil to be the only takeover candidate. Coming up, Black Friday underway with retailers sounding the alarm. That conversation coming up next with Leslie Falconio of UBS.
All right. Retailer sounding the alarm. Bing, bing, bing. I want to get to the bell. I'm excited to see how the market opens up today. We are just 3 minutes away from that right now. Okay, let's take another peek here at the treasuries. We'll be about 16, 17 minutes away from the course member live streams. Remember, you join any of the programs there on Black Friday. Lowest price, guaranteed. Deflation, but more value. So it's kind of like a double benefit, right? Lower prices and more value. Go check them out at meetkevin.com. You go to courses. I think we're at $399 for the brand new crash course with 14 micro topics inside of it. Really, really incredible value in that, though. Check that out. I've been working really hard on those video lectures, and they're good. I finished the lectures, and I'm like, damn, that was good. But anyway. For example, one of them, we had a 40-minute talk on liability from entities, insurance, lawsuits, minimizing that sort of stress in a business environment, self-employment, rental property. It's really incredible stuff. Anyway, bonds up about 5 basis points right now on the 10-year, looking at oil, roughly flat on Brent, down about 1% on WTI, the Western blend. NASDAQ still down by a few bips, trying to get to about 38 there on BTC, sitting at 37.7 now. Did run a little bit earlier this morning. The stock market closes earlier today. No real economic data today, other than obviously projections for Black Friday spending. What kind of measurements we get throughout the day is going to be a big deal. More deflation coming in from Germany. Exporting that deflation is actually critical for supporting margins at companies like our favorite Tesla. Think about it. You've got both China and Tesla, Germany, exporting deflation, some two big, obviously, manufacturing hubs, Shanghai, an export market, and Germany becoming that as well for the rest of Europe. Listen in.
Is delaying the launch of a new China-focused AI chip to comply with these fresh U.S. export rules. Some of this was hinted at on the call earlier in the week, although for a company that gets 1/5 of its revenue out of China, anything regarding supply to China is going to get some scrutiny, David.
Without a doubt. And, that was if you want to call it the negative from what was an extraordinary quarter yet again for the company. But the
20 seconds to the bell.
Negative results given the size of the beat and the guidance in trading on Wednesday after the report, Tuesday after the bell. We'll see, what they look like here. But again,
happy Black Friday, everyone. Remember, Meet Kevin. Big sale over at Meet Kevin. Deflation and more value.
And according to the report from the Semi-Analysis newsletter, they were supposed to launch November 16th. And being pushed to the first quarter of 2022.
at the opening bell here in the CNBC Real-Time Exchange and the big board.
There it is. Looks like we're about, 55-ish% green there. Somebody here is mentioning, did you see Turkey raised 50 points? You know, Turkey's at like 60% inflation, right? A complete disaster. What is it, Kids Day at the NYSE today? Also nicknamed the NYSE for NYSE. Did you know that? Anyway, let's go take a look at the open. There's the NASDAQ, by the way. We got a red candlestick here coming through on NVIDIA. We've got Palantir red candle sticking as well after that UK NHS contract that was rumored finally came through, and NVIDIA earnings came through. We're sitting down about 1.5%, 27 basis points on Microsoft. NVIDIA dropping about 90 bips right now. Enphase 23 down, Tesla 52 down. Not getting those green candlesticks here. Retailers doing better, though. Look at that. Best Buy up about 1%. Macy's 0.75%. Abercrombie up 1%. Looks like everything but the NASDAQ doing well here. Looks like those retailers doing better than tech stocks. Tech stocks dropping off right here. You've got the S&P 500 also rolling over. Talk about, yeah, that's great. The hostage transfer should have started about 31 minutes ago in Israel. 4 p.m. right now in Israel. Yeah. Well, deflation starts, right? Scott's here saying, how can you call it deflation when it helps me make 15% year over year in my job? I mean, I'm happy you're making more money at your job, but remember, it takes time for things to transition. And when you're starting to see signs of deflation, which we talked about and covered with evidence in the Meet Kevin video I just dropped this morning, I encourage you to watch it. You'll start seeing where the warning signs are and which companies to pay attention to, because I show them to you. Getting our green candlesticks after that first, volley there of selling. SPY going positive. Q's trying to turn up. Tesla's almost green. Look at that. Just went from about negative. There it is. Went from negative 60 to let's go.
Gained the lead.
Yeah, boys. What about NVIDIA? NVIDIA's about to. Come on, baby. Come on. Push it. Enphase. Oh, well, maybe we should just delete that one from the list. Just go over here and delete. And then we won't see it anymore. Tesla now up 0.5%. Wow. A complete flip-flop of about 1% there. Again, those retailers really pushing the green candlesticks, trying to push that SPY up. Let's take a look at what's driving us here. If anything in particular, we've got Open Door 2.4%. I think I can kick their butt. That's why I'm pretty excited. If they're a $1.6 billion company, what could I do with HouseHack if those idiots could do it? Sorry, I really just like Open Door. Bill.com 1%. HouseHack's picking up Black Friday sales all over the place on real estate, which is pretty exciting. Now you've got Lowe's down 0.5%. Solar Edge actually moving down about 1% as well. Let's listen into CNBC.
Even when it was ready.
You think this Black Friday football thing could turn into a tradition? We haven't had a Black Friday football game since 1962.
I heard Becky say that earlier on Squawk Box. It wasn't even the NFL. It was the AFL.
Yeah.
Makes sense that Amazon would want it on Black Friday.
And they're going to be promoting certain things within the broadcast itself for deals specific to Prime, obviously, during the course of the broadcast. I don't know. I'm just hoping, Carl, that I can watch for more than a half without just saying, I got to turn this thing off as a long-suffering New York Jets fan.
Okay, lots of complaining here. Oh, what do we have here?
Gained the lead.
NVIDIA up 25 basis points. Tesla up now 60, and then Enphase. Oh,
Lost the lead.
John Deere after their earnings, which we covered their earnings. We also went through deep in the John Deere earnings in the course member live stream last week. Remember, you get lifetime access to those. I've been doing course member live streams for coming on 6 years now, covering everything from real estate analysis, stock analysis. People love these. We'll be going to the course member live stream in about 10 minutes, 6:45 every morning. Course member live. But John Deere got whacked in their earnings, which makes sense because interest rates are so high. We were looking at some of the reapers and combines, and these suckers are like $1 million. So it's no surprise that when interest rates are so high, it's harder for that medium and smaller sized farmer to actually say, oh yeah, let's go get another $1 million tractor at an 8 or 12% interest rate. Good Lord. It's no bueno. Anyway. All right. So, Microsoft just turned negative. Look at that Microsoft stock, though. I mean, you had all-time highs of Microsoft at 346 was the 100% Fibonacci. We're basically going straight up to 428 on Microsoft here. Absolutely wild. That's not true. All the course lives should absolutely be live, full archive. If they're not, we'll make sure they are. But every single course live over the last 6 years should be live. And every day I'm mining away at this. I'm fixing, like, what you'll notice is there's a playlist section on the Meet Kevin channel. And if you go to the playlist, you're going to see archived content. And I'm sorting the archived content in. Like just yesterday, I put the Lauren Southern interview that I did. Gosh, I'm like, wow, that was like 2 years ago. It was such a good interview. Or some George Gammon interviews. There were some really good ones. And so those are all getting sorted back in. Everything's going to be live. So if there's something missing, just, send us an email at staff@meetkevin.com. I'll make sure everything's live. We're just sorting it back. So it's making it nice and clean the way we're putting it back. Online sales on Thanksgiving Day. No way. No freaking way. No way. I'm expecting these numbers to be negative, or have been expecting the numbers to be negative. But guess what? Thanksgiving sales were yesterday, which is a metric that we actually get at the start of Black Friday. You ready for it? You ready for the metric to see it? I will show it to you. Bloomberg just reporting. Here it is. Oh, the Black Friday sale on Meet Kevin's courses. Okay, sorry. I didn't mean to be annoying. No, it's actually right here. Online sales on Thanksgiving Day were up 1% year over year to $7.5 billion, according to Salesforce. Now, keep in mind, that's actually unit-wise probably negative, given that inflation's realistically still somewhere around 2 to 3%. Costco was warning about this as well, trending towards potentially deflation. Costco saying they want to be, the biggest to start cutting if they need to, because they want the membership. They want to be known for price cuts, not increases. Salesforce expects that figure to hold for all of November and December, which would be the slowest growth in the last 5 years, but it's still positive, especially with consumers spending on or prioritizing experiences over merchandise. And then they link that YOLO article everyone keeps talking about. Yeah. So YOLO is your younger generation idea of, everything's going red again. What is this? SPY just went red? Oh, no. Oh, wrong one. This one.
Lost the lead.
Oh. NASDAQ. Oh, even Abercrombie and Macy's just turned red. Best Buy's trying to turn red. Tesla goes right back to red. Oh, it's clickbait. Oh, Disney's pumping. Oh, everything's lost the lead. Oh, probably honestly because of yields. Yields up 5.2% right now on the 10-year Treasury. Okay, let's keep listening to CNBC for a moment. We'll try Bloomberg next.
At this point, the charter has not changed, so their responsibility.
Stop the count.
Basically, this idea of making sure that the technology is developed safely and not safeguarding the rights, for example, and or trying to maximize the value for shareholders. And of course, the key shareholder here is Microsoft. That were also an open question at 49%, having contributed through largely credits to use its Azure cloud, but nonetheless, what do they want, and what will they get to make sure something like this doesn't happen again?
There's a lot of cynicism surrounding the whole situation. I think the headline in The Atlantic this morning is "The Money Wins" at OpenAI. Interesting to think about things that could go wrong. But then you have Bill Gates on Trevor Noah's podcast talking about the promise of AI. In his words,
I'm not sure what you mean, Corn. You can get in for $3.99 to the brand new gold course on the Meet Kevin website. Take a look here. CrowdStrike. I see a comment on CrowdStrike. Look at that recovery in cybersecurity. I mean, they had one heck of a downtrend. You went all the way down to $93 on CrowdStrike in January, down from $300 prior all-time highs at the end of 21. Now you're sitting at $211 on CrowdStrike. Cybersecurity is supposed to be a big AI play as well. Let's go jump into Net over here. Cloudflare being another one. Cloudflare not seeing the recovery that CrowdStrike is seeing. I mean, look how aggressive that downtrend was, but definitely some recovery here. Still volatile on the day on some of these numbers here. I don't think the market really has a direction here. Macy's apparently had a great day of online shopping, according to the CEO, talking to Bloomberg TV, apparently suggesting that the consumer is under pressure, but they still love gifts. Who doesn't love gifts? All right, let's listen in here for a moment. Why is that not working? What? Where'd my sound go? What? Okay. Never mind. We would jump back over here where sound works. Uh-oh. I don't know how I just lost my third channel. My third channel has evaporated. What the hell? This never happened before. Oh, well. All right. I guess it's on me then. Okay. So let's see what we have. Today's the 24th. Oh, you do get PMIs. So at 9:45 Eastern. Oh, that's actually in 3 minutes. 3 minutes, folks. We're going to be, we'll look at the PMIs and then we'll jump over to the course member live stream. We're looking for S&P, excuse me, S&P Global coming out with the numbers. S&P Global Manufacturing expected to be at 49.5. Any number under 50 is contraction. We'll also be looking at Services Purchasers Manager Index, expected to be 50.3. And then the blend or the composite at 50.4. Those numbers coming out in just 3 minutes. And I'd like to see what's in their composite PMI. So composite PMI. Okay, here it is. So it is new orders for manufacturers of products, export orders, wages, cost inflation amongst goods and services. Composite's really a combination of all of these various different things. Composite output. Okay. All right. So that data, again, coming out in just a couple minutes here, 2.5 minutes, and then we'll have that data. So we shall see what happens. All right. Otherwise, let's take a peek here. Q's still bobbing around. Somebody here says video quality lower for some reason. Really, it was accidentally on 780 the other day or 720 the other day, but it is on 1080 right now. How's Trade Desk doing? Ooh, let's take a look. Trade Desk, $70, baby? Nope, 67. Up about 72 basis points right now. Oh, look at Tesla again. 70 bips up. Let's go.
Gain the lead.
Let's see here. Daniel G says too many channels. I actually don't think it's that hard. It's market open and close live stream on this channel. Not that hard. Big videos or breaking news, Meet Kevin channel, like it's always been. Okay, so all we've done is really segregated the open and close live. Then we have a podcast that I do with Mikey and McKay. And then I'm going to do, okay, this is an announcement. We're going to do, we'll still do the 9 a.m. politics today, but we are going to turn the politics into politics and gaming a section. We'll probably move it to 8 p.m. So it'll kind of be like Game with Kevin and politics talk, because so many people are like jaded by politics. They're like, at least do something entertaining while we talk politics. So that'll be like 8 p.m. That would, which is great because it's like that's after when the kids go down, and that'll be kind of fun. So we'll really get to just comment on politics at the end of the day while relaxing a little bit. So stay tuned for that. But yeah, I don't think that breakdown is that really complicated. Anyway, Enphase over here down 64 bips. Trying to recover. It was down 2% over there. Really volatile day. All right, we're about 20 seconds away from data. 20 seconds away from that PMI release that could make a stocks move here. Keep in mind, it is Black Friday. Black Friday sale. We are doing deflation. More value, lower prices. Big thing is that $375 gold course dropping Monday. Okay, PMI manufacturing comes in at 49.4, lower than expected, but services and composite beat. So weaker manufacturing, stronger services and composite, 50.8, 50.7, yet another mixed read here. Let's take a peek at what that means for the NASDAQ. That puts us at about 0.7. No, where are we right now? That was trade desk. NASDAQ still down about 0.16. So there you have it again. Check out the Black Friday sales. Email us if you need bundles at staff@meetkevin.com. That gold course drops Monday. It's really good for getting started. Crash course, all brand new content. None of it's chopped up. It's all brand new content. Let's get the disclaimer and jump to the course member live stream. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Check this out. This is YPF. This is actually your Argentinian, an Argentinian oil and gas company. And you actually could see if you go to MSCI Argentina, you can kind of invest broadly in Argentina. And look at that rally after the election you had over there. Pretty wild. So there you have it. Okay, I got to jump over to the course member live stream. The link's already there. I don't think I sent an alert, though. Oops, because I posted the link yesterday. Anyway, I'll see you at the course member live stream. Thanks so much for being here. Again, email us at staff@meetkevin.com if you got bundle questions. That gold course is going to be sick. Guarantee you love it. Like, it's so good. So $375 is a steal for what it is. Go check it out. There's also BNPL for it, although it's so low that I don't even think you need that. All right, folks, go into the course member live. See you soon. Bye.